The simple moving average, a milestone in technical analysis and trending indicators. Unfortunately, I have the feeling it is a bit too often underestimated next to more popular indicators. So today I'm giving you 3 very powerful ways of using the simple moving average. The first use I want to bring to your attention is the trend filter. Simple, yet so important. It will tell you when to take long or short positions. If the price is above, time for longs. If the price is below, time for shorts. Said differently, you use it to know whether the market is more bullish or bearish. So whether you're an active trader or more of a passive investor, this is key intel for success. If you're starting to know this channel, you know I'm all about little tests. So here's one for you. On this Bitcoin daily chart, I've plotted this white line, which is the 200-day simple moving average. And why is that? Well, historically, this indicator has really been key to trade stocks, but we should ask ourselves, does it really work for Bitcoin? So let's find out. Here's a silly little super trend strategy that I built. And basically the idea is to take a long when the super trend turns green, and when it turns red, you sell and you take a short and then you start again. So first, let's run this strategy without any filters on when we can do the long or the shorts. You can see here that on top of this changing of the super trend, I add conditions on the RSI. If you want to know more about why I do this, I'll refer you to that video app there. I explain it in details. It does give you a nice little optimization of the profits. Okay, so let's add the strategy to the chart and see the results. Okay, so for our reference strategy, almost 2,000% profits, 74 trades, and win rate of about 40%. Let's now add our 200-day simple moving average. So you can see I've defined my filter here being a 200-day simple moving average. So I'm just going to comment these and now say that the filter is such that you can only do a long if the price is above this 200-day simple moving average, and only do shorts on the contrary when the price is below the filter. So let me save and we can go check the results. Okay, so we lost quite a lot in our profits and the amount of trades almost divided by 2. So what happened here is that this filter was too stringent and took out too many of the good trades. But don't be disappointed about this. That's only because the choice of 200-day is not adapted to the high volatility of Bitcoin. I've found from experience that there's quite a sweet spot around 50 days actually. So let's change that, save. And bam, we've more than doubled our profits with respect to the beginning where we didn't have a filter at all. We reduced a bit the number of trades also from our reference, and the win rate increased a bit as well. So what happened here is that the 50-day SMA filter this time took out some bad trades. So some trades that were going against the market, i.e. either doing a short when you shouldn't or doing a long when you shouldn't. And that's what gave a huge kick to the profits. I will put this code on our GitHub so that you can fetch it and play with it if you feel like it. Is completely free. Remember that I'm not a financial advisor and trading can be risky. Personally, I wouldn't trade this strategy. The maximum drawdown is too high. But you see how the SMA filter is so powerful, and now you can adapt it to your strategies easily. Okay, maybe this was all obvious to you, but now, do you know how to use the SMA to spot resistance and support to improve your breakout trading? Back to our Bitcoin daily chart, but you see that this time the indicator that I plotted is a 100-day simple moving average. And that's because it's been really relevant to the last month's market conditions. You can see how the price of Bitcoin has tested this support line once, then tested it again here, yet again here, twice, almost broke out, but didn't. And then here almost tested again. And then it finally broke through. And when it broke through properly and then really pumped out of it. So it really acted as a strong resistance trend line. A bonus tip for you. How could we have guessed that this was going to be a false breakout? Well, this one here, a true one. Well, check the RSI here. At the moment of this event here, the RSI is not telling us much. It's not in an overbought region. It's not really going up. It's just kind of wiggling around this level. While here, at the moment of this breakout, there's a clear ramping up of the RSI, which is a clear signature of a very strong momentum. So much more uncertainty here. While here we have a clear drive, both in the price value and in the RSI. So always check your 200, 100, and 50 days simple moving averages for patterns when you're trading. We come to the final use, and I cannot let you go without showing you how much of a pillar indicator the SMA is. With it, you can construct so many famous indicators. In fact, there's almost always a SMA lurking somewhere. So let me give you a few examples and some trading ideas. I'm sure you've heard of exponential moving averages, so a simple moving average that is weighted by an exponential factor. Actually, if you want to know a bit more about the maths behind these, I have an old video where I explain them quite in depth. Anyway, with EMAs, I'm sure you've heard of crossings, where you use the crossing of two EMAs to create a buy signal, and then when you have the reverse crossing, then that signals the buy. But have you ever seen a ribbon like this? You can train with them, for example, when they start aligning like that, that means the trend is quite strong. Since here they're aligning downwards, this signals that it's a good time to make a short at this point. And you have the reverse case here, where now they're aligning but upwards, which signals a good time to place a long, because the trend seems to be quite bullish. You must have noticed also a new line appearing on the RSI. Generally, the RSI actually comes with its 40-day simple moving average, and this is what this yellow line is, which can help you as well in understanding the trend that the RSI is following. Let's briefly look at two more examples of indicators before I let you go. So let me clean this, remove that, and we'll add Bollinger Bands, and we'll also add the MACD. I'm sure you've heard of them quite often. They're very popular. Well, the Bollinger Band is just a simple moving average in the center, or sometimes also an exponential moving average, which you displace up and down by a number of standard deviation of the price, and you compute this standard deviation over a given look-back period. Let's reduce a bit the size of the standard deviation so I can show you a nice example on how to trade with it. And typically one way of trading with it would be when the price breaks out of the upper Bollinger Band for a long, or otherwise the lower Bollinger Bands for a short. You can place your order at this point and then choose to exit your order when the price goes back inside the Bollinger Bands. So the same at this point for the long. And what about the MACD here? Well, it's nothing but the subtraction of a fast moving average, often a 26-day exponential moving average, from a slow moving average, often a 12-day exponential moving average. And from this, you can get a histogram, which is basically green when the MACD line here in blue is above yet another SMA, a 9-day SMA of the MACD line. And on the contrary, when the MACD line goes below its simple moving average, then the histogram turns red. And basically the interpretation is that when the histogram is green, then you're generally in a bull trend, while red signals a bear trend. So you could trade from these crossings from red to green and green to red. This was Robot Traders for you, and there's some more here if you want. Don't forget to like and subscribe if you've enjoyed. If you feel like supporting, you can make a donation there. Until next time, take care.